We've been trying to get Abinash to come for a while, and Abinash has been in the 1M Premium program, and we've learned something quite important through the work that we have done with him and what he has done with his company. So I wanted to showcase that for broader consumption. So we're going to start today's session with a conversation with Abinash Saikia, co-founder of EnCloudEn. Abinash, welcome to the show.
Thank you. Sorry, last time.
So Abinash, let's start with, we're going to discuss, folks, for just so to set your expectations, we're going to discuss the topic of bootstrapping to exit. It's something that we support and promote within the 1M platform, and Abinash has executed on this principle very successfully, and I would like to interview him through his experience, his journey with this process for you to benefit from. So Abinash, let's start by introducing our audience to yourself as well as to the premise of EnCloudEn.
Sure. First of all, thanks, Ramana, for inviting me for this session. Sorry, last time I could not, I was not so well and I could not come around, but, thanks for...
Yeah, you had COVID.
And good to be, part of the program today. Just to introduce myself, I have, let me call myself a young entrepreneur, right? Have had a pretty good educational background in my engineering from IIT Chennai, and then subsequently I did an MBA from IIM Bangalore. Worked for a couple of years, but somehow the entrepreneur bug was always there, so could not really continue working for much longer. So in 2012, kind of left my job and then started a company called Smart Buildings initially, along with a couple of other co-founders. And we ran that company for about 3 years. It was mostly into IoT based energy conservation solutions. And we were probably early to market, and our traction, we saw some traction, but it was not growing like we wanted. So in 2015, we kind of figured that probably not the right time for us to pursue this right now. So me and one of the co-founders that I had in Smart Buildings, he also happens to be my batchmate, wingmate from IIT Chennai. So both of us, we kind of started another company called EnCloudEn. And so EnCloudEn is mostly into creating private clouds for different organizations. So it's a B2B product, enterprise software product. And we basically build cloud-based infrastructure for organizations on their own premises. Like, if you have, most of you probably are aware of AWS or Google Cloud, Microsoft Azure, things like that. But, if you look at the trajectory of growth of these platforms, all the companies, all the larger companies, smaller companies definitely, they don't have a choice but to go for these providers. A lot of the larger companies, they have their own data centers, and in those data centers, they want to set up their own private cloud. So, we had a software product which companies could essentially deploy a private cloud, and it was, the use cases were both on the application side as well as desktop side. We also delivered virtual desktops on our platform. So that's the product that we have built. We had sold to 20-25 odd customers in India. Satya and I, we kind of built this company. We also had a third co-founder, Vishwa, who joined us slightly later after we had started, after we raised our first angel round of funding. Vishwa is the third co-founder we had, and together we have built this company over the last 5-6 years. And we'll go to that, but last year we kind of towards the end of the year we got acquired by a Nasdaq listed company called Quantum Corporation. So they are pretty old, pretty large as well, storage company, and they found our product portfolio to fit well in the strategies that the company is taking forward. So we kind of came together and they acquired us, and now I'm part of Quantum.
So Abinash, I want to double click down on a few of the things that you said here.
Sure.
You have done this for about 5-6 years,
Yes.
and you did it with a small amount of angel financing. The full extent of financing was some of your own money as well as angel financing. What was the total capital that you infused into EnCloudEn?
Sure. I know the three founders, we were fairly young and did not really work for long as well, so we did not have any funds on our own. But
Mm-hmm.
we've been very lucky to have a set of angel investors, and I mean, we had the perfect set of investors that you could have. The kind of people that we had, head of Dell R&D India, Cisco, one of the vice presidents, Caterpillar India MD, a lot of some seven odd angel investors who are technology leaders, and they have very meaningful roles in large technology companies. So we had a set of these guys who had invested in us first in 2016. Uh, we raised around, about 300K at the time, and they had again doubled up their investment subsequently a couple of years later. And along with that, we also along with them there was a small local fund which quasi government fund which put in some money as well. So the total investment that we raised over this period of time was about $1 million.
Mm-hmm. And the angel investors that you ended up working with, did you know any of them beforehand, before they became investors? How did you navigate that journey?
Sure. Some of these people I have known from the past. I mean, one of the investors kind of played the role of being the lead investor to start with. So, one of the investors, he kind of three or four of the guys, other guys were, colleagues of him or people that he has worked with in the past. But there are a few others which we invested in the company. I had known because of startup connections in different, partnership connections, startup connections that we have had in the company.
Okay. So total funding of under $1 million from a group of angels and a little bit of government funds.
Mm-hmm.
And talk a bit about the customer development process. Where did you get the customers from, and which customers, what type of customers zeroed in on your value proposition, and you were able to close those deals? Talk about that journey.
Sure. But the journey started with a company, with a customer, of course. Before all of these guys put in money, we were able to acquire a very uh, reputed customer. I don't know, some of you, if you're in India, you probably have heard about a company called Biocon, which is the largest biopharmaceutical company in India. And in the 2 years that I was working, I had worked at Biocon. So I was working in a strategy role at Biocon. So I somehow, my manager at Biocon, he had connected me to the CIO at Biocon. So, I had built a relationship with him over time, and we could they became our lighthouse customer, right? So we really showed the value proposition with them. The CIO was a mentor in a way over time as well, because he has helped us in kind of figuring out the right features that we need to put in the solution. He was the first guy who tested the solution, found it meaningful. So we learned a lot from him as well, but they became our first customer, and that kind of started the journey for us, right? I mean, that is how we could really sell the concept to the investors as well. We could really show that it is not just a idea on the paper. It's a product that is already existing, and we have a customer, a pretty reputed customer, which is using this solution for a significant. It has a significant footprint in the company. So that is how we started. And with
What was
that,
the size? Sorry, what was the size of the Biocon contract?
It was a 5-year contract, so I think our total revenue over 5 years were probably about 300K.
Okay.
And yeah, so Biocon was the starting point, and then we continued selling to different companies. We focused on South India, and like most startups do, I mean, initial sales are all hustle sales in a way. I mean, the founder driven. You go after contacts that you have. You try and find these customers. So I was focusing on that. So I had kind of work towards acquiring all these customers. And yeah, I mean, we had a bunch of pretty reputed customers. We had, I mean, some of you, if you're aware of India, you would know there's a company called Manipal. We had IIT Madras as a customer. We had ISRO as a customer. We had a few government entities like HAL, BEL as customers. We had a lot of educational institutions. So a bunch of these, we had AIMS as one of the most reputed hospitals in India. AIMS was a customer. So we were able to create a good set of, customer base, and they were all pretty referenceable names.
Mm-hmm.
Yeah, but these were
Well,
all,
and I think what I have, in working with you, one of the things that my observation was that you were also being able to finance your customer development process and the product development process. So you were targeting Indian customers, being able to close Indian customers, getting feedback from Indian customers, and in that process, the product was being built.
yes,
So by the time COVID hit, you actually had customers in India, you had revenues, and your product was at a reasonably mature
yes,
level.
yes,
And all that was achieved with revenues and with a small amount of angel financing, which I
that,
think was very helpful in even thinking about trying to look for an acquisition. Because one of the things you mentioned, which I think I want to underscore, is the difference between founder-led selling and actually building a channel to sell. Building a channel to sell is a very expensive process.
that is right.
And it's very different from founder-led selling. Founder-led selling is a lot of hustling, yes, but it's also often with technical founders and technical products, there's a lot of trust building that happens between the founder and the customer. It's usually a technical founder selling to a technical customer, at least the technical decision maker in the sales process. And that is the best way to do early selling. So one of the reasons why in 1Mby1M we are very bullish about bootstrapping to exit is that this process of founder-led selling aided by either pure revenues, pure bootstrapping, or with small amounts of angel capital, friends and family capital, is that you can actually get through quite a bit of that process of getting solid customer references as well as product input and build something credible before you invest in this big sales engine. Now, the sales engine is expensive, so if you have to raise more money to build the sales engine, that will raise the bar on the exit valuation that you're going to have to get to. This is a point at which you have the option of considering bootstrapping to exit.
Sure.
Because there are people who have the channels, who have synergistic channels, who are looking for additional products to sell through the same channel. And I think if you can, the kind of stars align in a bootstrapping to exit scenario when you can get to that point where you have a attractive product or attractive technology, intellectual property, etc., that somebody who has the channel is interested in buying. So I think the success of Abinash and EnCloudEn, from my vantage point, is that all those stars lined up And you played your cards very well, Abinash, in making that deal happen.
Okay.
Now, let's talk about the acquisition itself. At what point did you start speaking with the acquirer, and what were the I know I introduced you to a whole bunch of people as well, so you were thinking about acquisition. We were working on getting you introduced, getting you in front of various people. Discuss a little bit about when did you start this process, and how did you put one step before the other in navigating that process?
Sure. I mean, I think starting of the pandemic is when we kind of started considering an option like this, right? We were focused on growing the company, and by the way, I mean, at our peak, we were pretty close to like $1 million in revenue. So we were able to get there just before the pandemic year. The pandemic year, half of the year we were more than $500,000 in revenue. So that year we were kind of stated to hit the $1 million in revenue, but just that towards the end of the year, which is usually the largest quarter in India, pandemic had hit, and we were not able to. Some of the deals which were large deals which were closing could not happen. But we were in that in that $1 million revenue range, right? Yeah, so when the pandemic had hit, I mean, it was a very uncertain time, and we really have to, and as a company which has which has acquired very limited funding, and we knew that we had some backup in terms of funding, but yeah, not a whole lot, right? Uh, and continue to acquiring customers. We know that we are going through a phase where sales will drop significantly because as I mean, the initial part of the pandemic for close to a year, I mean, the market was very, very bad from a customer acquisition perspective. So we were at a stage where we figured, I mean, it's time for us to probably start engaging with some of these potential acquirers, and it is not just to get an acquisition. I mean, of course, that was one of the thought process we had, and we wanted to do that over time. But we also thought that let's start some partnerships, right? Which these relationships which eventually lead to an acquisition, and if the time gets better, if the market gets better, of course, I mean you have good things at both ends. I mean, if you get acquired, that is also fine. Even if you kind of have some good partners, that also helps. And we were also, we were a company in India. We knew that there is a larger market globally, and we really did not, like you said, we really did not try to sell outside, and that was a costly proposition anyway, right? So we thought, some of these partnerships could also help us acquire more customers, not just in India but globally, right? So that is how we kind of started thinking about acquisitions, thinking about some of these partnerships, which could lead to acquisition or could become good partnerships that we could leverage over a period of time. So yeah, that's how we kind of started the process. And when you were right, I have come to you, and thanks for your help. And we could talk to a lot of very interesting people in that process. We connected with a lot of people. I mean, and that is how the entire process started. And I mean, and I also, I was trying to connect through you, but I was also reaching out to a lot of relevant people. And I just want to point out here.
In general, the process that you have to keep in mind, and I'm now talking to the ones who are listening to this conversation, if you want to do an acquisition, as Abinash points out, starting with a partnership discussion is a very good way to start discussions. And what we typically do in 1Mby1M, and it is the process that you were following, is identify targets and then find out on LinkedIn who are these people that would be meaningful people to have these partnership conversations with. Whether or not that leads to an acquisition discussion remains to be seen, but you have to start the conversation somewhere. Some of it is in product organizations, some of it is corp dev organizations. In some of our prior sessions here at the roundtable, I have introduced you to corp dev people. I've had them talk about their process from their end when they're looking at potential acquisitions, how corp dev organizations keep track of the different players in the industry, different targets from their point of view from the buy side. Here, we're discussing from the sell side, and from the sell side, you have to get on people's radars, right? So both the corp dev teams of your potential acquirers or potential partners and the product teams and the alliances teams of those organizations, you have to get on their radars. So if you're navigating this process, the best way to do that is by identifying who those players are, connecting them with them on LinkedIn, where if you're in the 1Mby1M program, very often I reach out to these people and connect you as well. So put all your resources that you possibly can bring together to start opening up on those discussions. People have to know that you exist and what you have. They have to have a deep understanding of what you have, what your value proposition is, what your technical unfair advantage, core competency is, what does your product do, what problem can it solve, what is the TAM for that product, et cetera, et cetera. All these things you kind of need to bring to the radar of the potential partners and potential acquirers. So that is the process of a bootstrapping to exit in a B2B scenario. So
just to add to that,
please.
Sure. LinkedIn is a very good tool. Of course, you could connect with people on LinkedIn. But by the way, this has been interesting, right? While I was doing this, there's no playbook for this, and there's no. I was reading up on the net as well. I was trying to figure out, how do you go about reaching out to these people? What is the right way to do this? How does it work? Things like that, right? And I had through. This was like a 1 year experience, where I was kind of reaching out to people, and then finally it led to the exit, of course. But I had learned a lot of stuff, and one part of it is also, why LinkedIn works. There are three ways you could do this. LinkedIn is one. Secondly, if you have a connection, and through that, if you get connected, that is even better because there's a reference there already. But what interestingly also works are cold emails, right? And it has worked in my case as well. With a lot of people. It's not just Quantum at the end of the day. There were other companies that I tried to reach out to. So if you have the right message to the right person in the company, you get noticed. It is difficult. The hit rate is not very high. But at the same time, if you kind of have the right message for the right guy in a company, email, emails also
I
work.
want to add what you said, Abinash. I think, LinkedIn is a very good tool to research who are the right people that you need to get connected to.
Mm-hmm.
Then the warmer the introduction you can get into those people, the better. Cold email works, cold LinkedIn connections work. Both of those work. But if you can work your network, whatever that network is, to get introduced, whether it's through LinkedIn or email or whatever, but if there's a warm introduction that you can get into a lead, that is always a desirable way to get in. But I think the point that you are making and I'm also making is that cold contacts also work. If you have something relevant, people are willing to talk to you because people want to learn what is it that you're doing. So there is a bit of a playbook. Actually, we use a bit of a playbook, at least in 1Mby1M, because we are doing this over and over again. We do have a bit of a playbook.
My comment is just so people don't hold back, right? Just because.
Right, people shouldn't hold back. You're right, exactly. You shouldn't hold back.
Right connection, don't hold back. If you try, if you believe that you have a value proposition, if you have the right value proposition for a particular individual in a particular company, your cold email also will work. So don't, just make sure you don't hold back if you really want to reach out to somebody.
Now, talk to us about where you got the traction for acquisition and what were some of the anecdotal features of that traction?
Like I said, I was through connections that you provided as well as through otherwise, from my investors as well, I reached out to, through my
Yes.
investors as well, I reached out to a bunch of people. And I reached out to a lot of people, cold email or cold LinkedIn messages as well, right? So done a bunch of these things, and yeah, I mean, then so you figure out. I spoke to a lot, a number of people. It's not just, finally we kind of ended up doing the deal with Quantum, but we spoke to a lot of people and a lot of very influential people. It was a very learning experience as well because. We were talking to a lot of very senior folks, and they had their own perspective. Yeah, so that was an experience. But yeah, with Quantum as such, I had our interaction started with the conversation with a corp dev person, and I mean, and interestingly, I mean. For this to happen, a lot of you need 10 tick boxes at least, right? And I mean, 10 things have to align, which include, they need to be in a lookout in the space that you are in. I mean, you have a value proposition in space, right?
Yeah.
You have to have credibility. There are a lot of these tick marks that has to come together for an acquisition to happen. So luckily with Quantum, I mean, they were looking at the space that we are in, and we have been unknown, of course. We have only sold in India. We were not very known outside of India, and this company did not, Quantum team did not know us, of course. Once I reached out to them, uh, I mean, the conversation started, and interestingly, our value proposition and what we delivered as our technology were pretty impressive to, just from the starting meeting. I mean, if I remember correctly, even in the first meeting, one of the leaders that from the quantum side who was talking to us, his version was, if whatever you are saying is actually there, you guys have really a great product, right? I mean, and of
Mhm.
course, you're going through this phase. You're an Indian company based out of Bangalore. You're reaching out to somebody in the US somewhere. You kind of start that conversation. There is no connection as such. They don't know you. You don't know them. They don't even know, yeah, so there are a lot of skepticism to start with as well. But at the same time, I mean, the story that we had, the value proposition that we were able to show, was always exciting to them, right? And I think we, from our side, we did a very good job in terms of really researching and understanding what each of the individuals that came to meet the meeting was looking for, right? And we kind of
Mhm.
were able to bring those inputs in the meetings to the presentations. I would like to credit my co-founder Vishwa here. I mean, he did a fantastic job in terms of really building the presentations and kind of talking about the stuff in a very, very compelling way. And we kind of did a lot of research about all the individuals who were coming to the meeting, about what they were looking at, things like that. And kind of we were able to align the message very, very well to what they were looking for. So that's how we
Yeah.
started the conversation. We had, yeah, I mean, and then uh, initially, I think we had a few conversations, but then uh, we were not, yeah, I mean, and then there was a gap of some time. I mean, we were also a little busy with some other things. They were also a little busy. Yeah, but then, I mean, the conversation rekindled again after a few months, and then this time, I mean, the conversation was yeah, in that direct direction of an acquisition, and yeah, and you go through the process there. I mean, we had multiple meetings with all the stakeholders, with the CEO of the company, with the CFO of the company, all the technical team, engineering team leads, engineering leaders of the company, sales team, services team. So you go through a lot of
And
this.
these were all Zoom meetings.
Repeat that.
These were all Zoom meetings.
Yes, these were, I mean, that was one big aspect of this. I mean, we were able to execute this, and I credit both sides for this, right? I mean, we
Oh
were
yeah,
both
no, I
sides.
think the whole industry has become really good at deal making by just using Zoom and for all of the process. So
Yeah,
yes, this has been a big advantage, and I think this is very much in favor of international entrepreneurs, global entrepreneurs. Now you can really do deals globally just by using online tools. So that has been a very big advantage.
Yeah, no, when we
Abinash,
started out, I thought we will probably need to meet at some point, but the pandemic was raising and we never had to meet actually. But what we had is we were able to build good relationships. Personally, I mean,
yeah.
I had I mean, the entire team, but I had built a very good bond with a corp dev head in a company. And in
Mhm.
fact, it went to a level where, the corp dev guy, he wanted me to join his team, and I finally joined his team at Quantum, right? But I mean, I think that kind of helped because, because there was a bond that we were able to build, and through that, I mean, both of us were like managing it from both our sides. I mean, I was managing it from EnCloud, and he was managing it from Quantum. Yeah, but
Yeah.
I mean, we could bond well, and I mean that really probably helped us be little more credible to both the parties.
Yeah. And what about the price negotiation?
Yeah, so that was very interesting as well. Just before that, I think, yeah, I mean, one of the things that you do when you do this, is that your products get tested very thoroughly, right? And I think, people need to be, and especially when you are doing it remotely, and they don't know any customers that you have and things like that. So we had gone through a very thorough product testing phase where kind of their technical team kind of looked at the product and very thoroughly tested the product. So that was like a month-long period where our team was really engaged, and we were able to really show them all the use cases, show them the robustness of the solution, how redundancies are built, all the features that we talked about, we were able to show that. That really helped us in the process as well. Yeah, so that was, sometimes, though that the testing phase could be post negotiations, right, post the term sheet. But in our case, we had done this prior uh, to the negotiations, right? So, yeah, so once we had gone through this entire process where, we have met the entire leadership team, they have met us. They had tested the product thoroughly, and all that is done. I mean, we had engaged with the CFO at that time, and yeah, but that was a very interesting phase. I mean, just negotiating a deal with the CFO of a Nasdaq listed company was exciting and interesting experience. And yeah, I mean, it started off with an initial term sheet, and then we had to do a lot of back and forth. It was emotionally draining as well, because as entrepreneurs you have certain expectations, and then the buyer also has their own expectations. And how do you meet at some point, right? What was also difficult was, we had 15 people in our cap table, right? So you really have to. It's not just you are agreeing with the buyer. I mean, you have to have 15 people aligned to the deal as well, right? And that was quite interesting and challenging. I mean, this is luckily I have always built and had a very good relationship with all the shareholders.
Mm-hmm.
So, I mean, that really helped in this process. And I mean, I would just leave it to all the entrepreneurs as well. I think, always it's very important to have very good relations with your investors. You need to be very transparent with them, very upfront with them, and they need to trust you at the end of the day, right? They need to know that you're doing the right thing, not just for yourself, but for everybody, all the stakeholders in the company. So we had that trust and that help, but still, I had to go back and forth to a lot of the investors, had to convince them on the valuations. Everybody, if you have 15 people, and these are all very senior people at various stages of their, career, so everybody had a very different expectation. So we had to really work. I had to really work on this with everybody, and yeah, like I mean, we
Did
were.
you did you have an offer before you started this conversation with your 15 shareholders on the cap table?
So what I had done is I had taken some people into confidence, and I had not given them a value, but I had taken a sense of what they're looking at,
What they were looking at, what their expectations were.
what their expectations were, right? And yeah, so that is, I had, yeah, when I had taken some people in confidence, in general, I mean, I would typically chat with these all the shareholders every month or so in general, one-on-one chat so that I mean, these are general personal conversations, also updating about the company. So I had, yeah, I mean, I had gotten a sense of what people were expecting at that point as well. And that really helped in the process. Yeah. And, with that, of course, we had gone into the negotiations. We had, yeah, bunch of meetings with the CFO, and finally we got to a stage where, we could really
And
converse at a point here.
do you feel comfortable disclosing any of the metrics of your deal?
No, I'm not supposed to, Shravana. But
Okay, that's
let me
fine.
just tell you, I think I feel very proud about the deal as such, primarily for three reasons. I mean, we had really taken care of all the stakeholders in the company and in the negotiation process itself. I mean, it's not just the shareholders of the company. The shareholders had gotten a pretty good uh, uh,
Return.
valuation bump. I mean, they got a good return on their investments. We also made sure all our customers are well taken care of. So, Quantum is taking up the responsibility of supporting all the customers, and all the commitments that we had given to customers are being taken up. I mean, that was one of the points in the negotiation we made sure, I mean, that they aligned with. And lastly, we very much wanted all the employees to be taken care of well as well, right?
Yes.
So all the employees had become part of Quantum, and we made sure all the employees get a sizable hike in their salaries, and also from our end we were able to give a good parting bonus to all the employees. So so that way we were able to do a good deal for all the shareholders, all the stakeholders in the company, all the shareholders, customers, as well as employees, and that makes me very happy and very proud. Yeah.
Excellent. Well, congratulations, Abinash. Wonderful outcome. I'm sure you're going to do a lot more with your life. You're still very, very young, and enjoy Quantum meanwhile.
Sure, sure. Thank you.